You are listening to chartingwealth.com for Wednesday, the 25th of April, 2018. We see stocks and bonds down for the day, gold up. We start with the S&P 500 as we always do. And on the weekly chart, we see so far 2 days into this week, we have a red spinning top, wick on the bottom and the top. Derivative oscillator continuing to lose downward momentum, but the price percent oscillator is still jacked in, heading down quite nicely. And we'll just continue to watch, again, price movement. As soon as we get more candles going down, we'll be able to redraw it, but we've broken through that trend line over the course of the last 2 weeks. And again, they sort of petered up over the course. We had a spinning green top and then a green candle on the prior week, and so far this week that red spinning top, which of course means indecision so far. We look at the 2-day chart, we can see how it is heading down. Now we just finished drawing the latest 2-day candle, and of course it is a decent red down candle after a red spinning top. Again, remember, spinning tops mean indecision. The color tells you that tending down, which is exactly what we saw, broke through that 2-day trend line at the close of that last candle on the 20th. And this latest candle, again, a red down candle with a long wick on the bottom. Price percent oscillator headed down, derivative oscillator losing upward momentum. No price crossover going down yet, but all things being equal, the market does tend to move in the direction of the largest chart, which is our weekly. We look at that 4-hour chart, we see it crossed over, had a double crossover of the price percent oscillator and of the derivative oscillator at the same time, going down there on Friday afternoon, the 20th of April. And an even bigger drop started off in the morning, up a little bit, then in the afternoon down strong on Tuesday. So back to that's where we are. So the derivative oscillator gaining downward momentum, price percent oscillator headed down. See if that 2-day chart rotates over, and if it does, we might have the possibility of a down trade in the near future. We shall see. But again, once we blew the market out all the way back for that week ending the 9th of February, things slid sideways, tried to recover, dropped off, trying to recover again, starting to drop off again, potentially, again, just the first 2 days of this latest 5-day candle. That said, we moved to the Qs. It was down the most. The S&P 500 down 1.33. The Qs down a full 2.09%. Again, we have a red candle that is forming on those first 2 days of the week. Price percent oscillator still headed down strongly. Derivative oscillators lost some of that downward momentum. As we zoom in a little closer to the action, we see on the 2-day chart, red down candle with a long wick. Price percent oscillator crossed back over, going down. And again, this is a new 2-day candle that has finished drawing, so we have a crossover going down. We shall adjust that as far as our arrow goes. And what we see happening, of course, is the price percent oscillator losing momentum. The derivative oscillator rather as losing momentum. Price percent oscillator has crossed over. We have penetrated the 2-day trend line, and now we have a new trend that's forming. And on the 4-hour chart, we see that it crossed over, going down back in the afternoon on Friday the 20th, and has continued to move down quite substantially, down in the morning on Tuesday and a big down in the afternoon. So again, we'll continue to keep our eye on things. We now have the 2-day and the weekly both in confirmed downtrends along with the 4-hour chart. So we will be looking for jumping in points on the Qs. And once we get a new pattern moving on the 2-hour chart, the 2-day chart, we'll be able to chart a good trend line at that point. Now, let's keep moving through. We see on the weekly chart, we have the TLT 20-year bonds actually heading down quite strongly as we open the week. Looks like we'll probably finish the week. Well, we say that. It could pull back if there's some up moves, but price percent oscillators crossed over, going down. Derivative oscillator continuing to lose momentum over the last 3 weeks. A big red down candle so far. And of course, we will see by the end of the week if that weekly vertical crossover occurs going down. On the 2-day chart, Of course, we do confirm that now. Well, we confirmed it on the when it first occurred, and it has continued to show itself in a strong down move. We're in our second strong down candle, and we'll continue to watch and see as the derivative oscillator gains downward momentum and the price percent oscillator heads down. We look at that 4-hour chart. What do we see? Well, it crossed over going down in the afternoon on Wednesday the 18th. Then a big down morning on the 19th, and has just continued to move down steadily since then. So again, we'll wait and see how this week ends up, and if we do have a confirmed crossover going down on TLT. And again, if we have a weekly vertical crossover, we'll look to jump into that on the following Monday. We will keep you posted. Lastly, we go to gold. Gold up 0.49%, the only chart up for the day. Now, so far, the weekly candle is down. Derivative oscillator is pretty much flat. Price percent oscillator is headed down. As we look at the 2-day chart, we see that it has crossed over going down, really has been sliding sideways for a while, bumping off the red signal line. But on this latest 2-day candle, it has actually managed to cross over going down. So we shall note that and move our vertical crossover line accordingly and adjust our arrow accordingly to show that down move. Derivative oscillator, of course, is red. Price percent oscillator headed down. And lastly, take a look at the 4-hour chart. And we talked about this yesterday. Were we going to have a bottom here? We saw things bottom out, it appears so far on the short chart, that we bottomed out somewhere around 125.51 on our Heikin-Ashi candlesticks, and then started the day off moving up on Tuesday. Derivative oscillators losing downward momentum. Price percent oscillator not quite flat. So we'll continue to keep an eye on things and just see if this 4-hour chart starts working again, or if the market's just taking a breather and is going to continue in that down move. We shall watch, wait, and see. We'll let you know as things shape up and whether or not we have any weekly vertical crossovers at the beginning of the week. Do keep your eye on the cues for a jumping in point now that we have the 2-day and the weekly moving in the same direction. That direction is down. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters. Don't forget to pre-order your book, Charting Your Way to Wealth. It is now available. Look in the show notes and look on chartingwealth.com, the website. On the daily postings, there's links there where you can buy your stock traders journals to fill out every day the market is open and put your practice trades down on, and also Charting Your Way to Wealth. Thank you so much. Appreciate your support. Appreciate you being with us. God bless from the whole team here at Charting Wealth World Headquarters.